PwC South Africa has released its fifth South Africa Economic Outlook report for this year. The edition provides a perspective on the current macroeconomic environment. It's looking particularly at our exports and imports dynamics. The report forecasts real economic growth for our main import and export partners, our main trading partners, of 3.7% this year. In January, the prediction was for just under 5%. We're joined now by the PwC Chief Economist for South Africa, Lullu Krugel. Lullu, good afternoon to you. I mean, it's obvious for our international trading partners, like China is a good example. They seem to be slowing down. If they have a slowing economy, we're going to be badly affected. What predictions are you making for the country's economies that we also rely on?
Yeah, unfortunately, Stephen, I think if there's one key message is that almost every economist has downgraded the economic growth forecast for every single country globally since, I would say, last year. And as you say, the growth forecast for some of our major economic or trading partners have also been downgraded. So unfortunately, the reality is that it means that will probably mean lower demand from those economies for our export products. We have seen in particular mining, agriculture, products in that space in particular having seen quite a boom over the last couple of months, and the challenge is that trend will probably not continue, specifically if those economies slow down in terms of their growth. And then combined with that, we're also sitting globally with high inflation.
Well, I mean, inflation is the thing, isn't it? High international oil prices, disruptions to supply chains, just the cost of actually doing business, of getting your widget from the South African mine into China and getting the solar panel from China into South Africa, the cost of doing that is going up.
The cost of doing that is going up because the input costs, as you rightfully have said, things like oil prices and so on have skyrocketed. But combined with that, we're also sitting with global supply challenges. So even if you can get the goods, it's not to say that you might have all the inputs that you need. And we've also in South Africa seen the impacts of the floods in KZN and our ports there in terms of exporting and importing goods. So it's a triple whammy. It's almost a whammy from every side that you can think about, and things not necessarily going right globally as well as locally.
Our agricultural industry has done all right, as you say. Still strong demand for platinum. In fact, you could argue that platinum right now, our platinum reserves are probably paying for a major sector of social grants. Any predictions for how long the platinum commodities boom is going to last?
So the commodities boom in general, I think we thought that by now it would have run out of steam. And I suppose a bit of the good news is with all the uncertainty globally and also with the war in China and, I almost started another war now, between Ukraine and Russia, that has prolonged the drive or the upward trend that we've seen in commodity prices. So at this point in time, the downside is the longer that continues, the worse it is for inflation. But the upside is that market uncertainty is actually providing good fertile ground for our mining exports, and that is potentially set to continue for as long as that war continues, which we don't know at this point in time.
Lullu Krugel, thank you. South Africa's Chief Economist at PwC. Do appreciate it.